It's hard to breathe, but that's alright. Hush.
Hey, what's going on, guys? Welcome back to a new video. Now in this one we're going to be going over a gold recap. It was a huge trade, one of my biggest trades, but yeah, it was just a crazy trade, and I thought I'd recap it. And there was someone else as well who caught this, Ghost I believe it was, which is crazy. And at the time of this as well, it was around the fundamentals, so there's been news released. But honestly, price movements aren't random. I know there's news and stuff like that, but it's always doing something, right? So one of the entries was based on the Wyckoff and stuff like that, but that's something for a different course. I won't go into that today. But as you can see, price is sort of trading between this sort of range. We had this resistance be tapped there, resistance be formed, tapped into again. So it's just trading between this range. And in terms of when we implement Wyckoff, we know that we have a previous markup, distribution, and a potential markdown. So we was obviously, we could have seen this as, prices had a previous markup starting to range, so we could expect further downward movement. Now obviously I'm expecting a bit more of a spike up to the upside, but I thought why not take that risk, as I've seen a nice potential entry here, because as you can see, price came up, break of structure, had a little range, boom. So I just pretty much drew up that range, from this high to this low, because that's within the range. I was looking for a trade anywhere within this range. I was looking for that smaller time frame, blah blah blah, right? Anyways, I went onto the 1 minute time frame, found a valid order block up here, the most extreme in price, as we were trading obviously off this sort of resistance, right? So we wanted it quite close to this resistance as extra confirmation. But yeah, so if we just go to the 1 hour time frame, you can see here now that we have this sort of demand zone. So I was looking to target around there. I targeted the equilibrium, and it was a nice trade. As we previously tapped into this, and this has sort of failed, it's sort of broken below. We had a slight closure below, then price started, came back out. So it looked like a classic manipulation, right? So took out the highs, took out the lows. The price started ranging, and then as the London session kicked in, what happened is that price, pushed price up because it was previously ranging. If you look here, right, ranging, then as around 7 o'clock you had a little bit more arrangement. We had that buyer trap, so people who were looking to sell, seller trap, sorry. You had had that pretty much bearish sweep, right? So we had the liquidity sweep to the downside, and then mitigating an order block over here, in which retailers wouldn't have saw that as an order block. They would have looked to sell on a breakout. Unfortunately, price closed back in and started making these new highs. Now between 12 and 2 o'clock is obviously our New York reversal. So anywhere between that time, I was looking for a nice trade to catch back to the downside. So that was an extra confluence, and obviously we're tapping into this range created supply zone, in which it was refined to an order block up here. So if you wanted to take a risk entry alone based off that, then that would have been a huge trade. Stops would have been above this wick, and then obviously we would have targeted down here, and that would have still been alone a huge big trade. But obviously, me being me, I like to take the confirmation entries, just but I had time on the charts, and it was just more safe, I suppose you could say, right? So yeah, we got a lot of confluences here. Obviously, we drew up our classic premium discount thing, but we knew that we was already selling within this sort of premium zone. Again, as it's resistance, we wanted the most extreme in price, so this order block here would have been invalidated anyway. Also, we measured up momentum. As you can see, it was pretty bearish compared to it was bullish. So again, all of confluences and all that, I think, etc. was just lining up. And if you go onto the 5 minute time frame, just look back here, and at the time this is around fundamentals between 12 and 2 o'clock, in which we were looking for New York reversal. I believe there was another position on here somewhere. As I've shown you a scaling, but I'm not sure where it's gone. But yeah, as you can see, price tapped into that very nicely. So if you did take a trade of that alone, then well done. But if we just go to the 1 minute time frame, I'll just show you the valid entries. So okay, so what we could have done, we could have entered off here, right? I'll explain why in a minute. So that would have been stops above there, and also we entered off here as well, because obviously it's mitigating this range created supply zone. Right, we could have took a trade off the equilibrium or the open, and probably would have been put into the trade within spread, when you include spreads. But the open was enough. Stops above here. There's a nice 7.2 pip stop. and then obviously we're looking to target that higher time frame demand. But if we just drag this all the way down, right, so as you can see, order block, breakout structure, right, so we've broken two structural levels. Obviously, you know, if you look at it in terms of momentum, two candles, 1, 2, 3, 4, blah blah blah, so on, right? So there's much more bearish momentum than there is bullish. As you can see, again, created another order block, or this sort of, you know, range created supply zone. The reason why I included this is because this wick high lined up with this wick high, and this looked like a neutral candle, so there wasn't really, you know, you couldn't class it as an order block, but this was the last clear bullish candle before the down move. So as you can see, that created a valid, you know, sort of supply zone, which we're looking to take a trade from. And as you can see, price broken structure to the downside, and also a wick below here. Obviously, I don't include it as my breaker structures, but for those of you that do, it would have been a class as a breaker structure. But I was happy with this one. I was believing in that short-term bearish, you know, strength. Bearish US dollar strength. And as you can see, price tapped into the open, so that would have been your scaling, and that trade would have been 41.16 alone, you know, percent. If we just drag this down to the bottom to where this other price was, right, as you can see, 59.06 at 41, right? But that is one hell of a trade. So that alone was crazy trade, you know, a 100-odd trade from literally 2 trades using order blocks and mitigations and high time frame point of interest. And that's the power behind, you know, these confirmation entries on a small time frame. But yeah, it was a nice trade. I would go back and show you the order block. It was over here, it was over there. Price tapped into it, came back down, tapped into that one, tapped into this one, came back up, tapped into this one, and left an order block up here as well. So we just left this as our resistance. Obviously, we wanted the most extreme in price, and this is the smaller time frame resistance, so it made sense to just look for entries around there. I thought it was there, to be honest. I don't know why it's up there. Probably was there when I entered the trade. But overall, you know, it was a very nice trade. Really can't complain with it. But you know, 100-hour trades, and how long did that take? Because this was obviously a time around fundamentals, so there's a lot of volatility. And this is the tip to trading fundamentals. If you see price set on, you know, an order block or a sort of valid supply and demand zone, and the fundamentals come out, if you want to take that little risk, go for it. Because usually these price movements aren't, you know, they're not random. They tap into these things, right? So as you can see, price came back down, tapped into this within, obviously, well, the next day, I believe. Where's my indicator? Yeah, so within the space of literally exactly 1 day, so 24 hours, you had made 100% return on your trade. So if you're, you know, ballsy enough to, for example, have that on an FTMO account, 1% risk, 100k, whatever, that would be over 100k or 100k, right? Which is just, well, crazy. You know, people have made that because one guy the other month made 73k, and that was off the 100k split, I believe. So, you know, that was, you know, and it's achievable, it's possible. And you know, when people say, "I'll be realistic," that's the worst advice you could ever receive. So you know, the next time, you know, when you have a funded account, aim for these trades. You know, why not? Who's telling you not? You know, but obviously at the, you know, the beginning of all of that, you know, at the beginning of your trading journey, we won't be doing all that. But yeah, thank you guys for watching, and I'll catch you on the next one. And that was a gold $100 trade.